a quick guide on how you can use Diversset. First, click here. Then you will be given an option to choose your risk aversion. The risk averse investor is someone who wants to lower his risk. The risk-seeking investor wants higher risk instruments and higher return instruments. Of course, he's expecting higher return. And the moderate investor is someone who unites the risk aversion and risk seeking. So it's someone who wants less volatile, but from the same time, he also wants to buy more volatile instruments. So he wants to combine both strategies, both ways in his portfolio, in his investment visions. So you have to choose your risk aversion. That's the first step. Let's say we are a risk averse investor. Then the second step, you have to choose your expected portfolio return. Let's say I want my portfolio to generate me 15% yearly return. Then I press show the result, and the application shows me stocks that are tailored to my risk aversion. As you can see, the stock beta is pretty low. It is 1.7, 0.87 here. You can choose stocks based on the beta. You can filter the stocks. You see, this is less volatile stocks, more conservative stocks, and these are slightly more volatile stocks, the company name, company ticker, market cap. You can also screen companies based on the market cap if you want. Simply press over here or on the beta. You can monitor the countries. As you can see, it's not only the United States exchanges that are present here, it is global exchanges. We have stocks all over the world. This application covers stocks globally. And then you have two options. The next step is to build the portfolio. You can just press this build the portfolio button and the application will construct your efficient portfolio from 10 most liquid stocks from this filtered list. Or you can manually choose 10 stocks by clicking right here, and the application will construct your portfolio from the stocks that you select. You just need to input 10 stocks to select 10 stocks. If you choose lower, the application will build you from the default most liquid stocks. That's why it's important to choose 10 stocks over here, not 9, not 11. Choose select 10 stocks manually. But in this example, I will not be selecting everything manually. I will just let the application construct from the most liquid stocks. Now I'm pressing build a portfolio. This message says that to build the 10 stocks from the list, if you want to select, you have to choose 10 stocks. That's what I told you earlier. And now application starts building your efficient portfolio, and here you go, that's your efficient portfolio with your indicated return. Sometimes when the application is not able to build the portfolio with your indicated return because some stocks are more riskier, more volatile because of the market conditions, the application will try to optimize your portfolio so that the assets allocated here will generate the lowest possible portfolio risk given your return, or if it is not able to lower the risk given your return, the application will be changing this expected return and you would be able to see other number. But in this example, application was able to build a portfolio with our expected return 15%, and it says that the minimum risk would be 1.77 if you distribute the stock weights in these proportions. For example, if you invest 23% in Apple stock, 21% in the Microsoft stock, 23% in this company, Danaher Corporation, Nvidia Corporation, Berkshire Hathaway, 25%, and the app distributes asset allocation it's called, so that your portfolio's volatility would be lowest possible from all other portfolios on the market with the same stocks that you have, but with different weights of those stocks, given your required return. So in this case, application allocated you assets in this proportions. If you follow it, you have pretty high probability of meeting that volatility, lowering it as much as possible, and meeting your expected return. We can of course consider other cases where app constructs by default. For example, let's choose also risk averse. Let's say return, let's put return 19%. Let's see how it goes. Yeah, with 90%, application also was able to construct slightly other weights we see. Let's choose, let's say, risk seeking. And as you can see, the expected return now can be higher. Let's say I'm risk seeking because the stocks are more volatile right now and I want 62% yearly return. Show the result. You see different stocks here because you are more risk averse investors. As you can see, the stocks are more volatile now. You can see by the beta. Beta measures the stock standard deviation to stock volatility to the market. In this case, it's S&P 500 that the application is comparing to. If it's American stocks, if it is international stocks like a Canadian, it compares to the Canadian stock exchange and gives this beta. So the beta 3.5 indicates that the stock is 3.5 times more volatile than the index in Canada, or 3.553 more volatile times more volatile than in the US, than the S&P, because that's the US stock. Then I press build a portfolio. And as you can see, the application says that your return was 62%. Unfortunately, it's not able to build to allocate the weight so that it is minimizing your expected volatility. In this case, it says, listen, your portfolio's expected return could be 4%, but the minimum possible risk would be only 2%. So you can lose 2.39% possibly. If you distribute these weights, if you allocate your stocks and ETFs in these proportions, this application searches not only stocks, but ETFs as well, stock ETFs. If you put these weights, you have higher chances of lowering your return. Lowering your expected volatility, given this expected return. So the application couldn't find the optimal portfolio. It's called optimal portfolio. That is the portfolio with the minimum possible loss given your required return, but it is constructed the minimum risk portfolio, and it says if you want minimum risk, that is the best I can do right now. If you're not satisfied with these results but still want these stocks, you can try using the app the other day, in 1 week, in 2 weeks, in 1 month. Maybe stock volatility will change, stock trading characteristics will change, market sentiment will change, the investor liquidity, buyer liquidity, seller liquidity will change, and the app will recalculate everything and it will show you completely different picture. But right now, the application shows you exactly this. So this is the application. You can use it. You can also go to the Fever, me on Fever. I can do equity valuations manually. There are great iOS applications for equity investors también. This is for calculating the stock target price. This is for getting investment ideas. This is very good application for sharing and getting investment ideas, to see what other people, what other traders, investors are buying and why. This app is called Stock Target Price. Another application is Stock to Buy. It is called Stocks to Buy. These two applications are exclusively on App Store. With this application, you can get stock trade recommendations based on three very important indicators that professional investors are using. So then you can see the strategy also, where I publish everything related to the US stock market. This is the trading strategies. As you can see, the May trading strategy, I explain what was happening the past months and what you can expect the next months, the current months, as well as highlight the levels where stock market can be trading at, and I'm explaining why. Then you can see the education. It's my paid Udemy premium course devoted to risk management, portfolio management, equity valuation, bond valuation. It's must-have course if you want to learn trading, if you want to become professional trader, portfolio manager, and investor. I highly recommend this course. Then I also have blog. They're very useful materials if you want to learn trading, valuations, investments, risk management. I have a lot of useful articles, so you can read them, and this would be the step towards becoming a better investor. Don't forget to follow me on the blog, tip me, because I'm not getting any profits from monetization. This application is free. Also, don't forget to follow me on my social media, Twitter, Instagram, and thank you very much for watching this demo video.